Hi everyone, welcome back to Commerce Student. Today in this video, we will understand some other accounting concepts. In my previous video, we understood what accounting concepts are and also explored first 5 accounting concepts in detail. If you have not watched that video yet, you can find the link in the description below. Now let's get started. Moving on to our first concept, that is dual aspect concept. This concept is also known as duality principle. According to it, every financial transaction has got two aspects which are both equal and opposite. That is receiving and giving aspect or sacrificing and benefiting aspect. Imagine purchasing a computer for rupees 25,000 where you are giving away the money, that is sacrificing aspect, and receiving the computer, that is benefiting aspect. In other words, the twofold aspect of a transaction is indeed what defines the dual aspect concept, that is debit aspect and credit aspect. This concept tells us that every transaction involves at least two accounts. One account is debited, another account is credited while recording. So for every debit, there should be credit, as well as the debit and credit entries of a transaction must always be equal in value, ensuring that the accounting equation remains balanced. That is, assets must equal to the sum of capital and liabilities. For example, purchase of furniture for cash rupees 30,000. In this transaction, two accounts are involved, that is furniture account and cash account. Both are asset accounts. Furniture is coming in the business. When any asset comes in the business, debit it. And cash is going out from business. When any asset goes out from business, credit it. Therefore, furniture account is debited with rupees 30,000 and cash account is credited with rupees 30,000. It must be noted that both debit and credit entries have equal amount. This concept provides a foundation to the double entry system of bookkeeping, which records the twofold aspect of each transaction, that is debit and credit. This system ensures accuracy by balancing debits with credits. It also provides a complete picture of financial position, including assets, liabilities, income, and expenses. Therefore, the dual aspect concept is essential for accurate recording and reporting of financial transactions. Next, revenue recognition concept. This concept states as to when revenue should be recorded in the books of accounts. Revenue refers to the inflow of cash in business, either from selling goods and services or from other sources such as rent received, commission received, etc. According to this concept, revenue should be recognized when it is realized or realizable and earned. This means that revenue should be recorded when goods are delivered or services are performed, regardless of when actual cash is received. The criteria for revenue recognition revolves around the concepts of realized, realizable, and earned. Revenue is considered realized when goods or services are exchanged for cash or other assets, indicating that the transaction is complete. It is considered realizable when there is a reasonable expectation of receiving cash or other assets in the near future, and it is considered earned when the seller completes its obligations towards buyer and the buyer can use the goods or services. So proper revenue recognition is crucial for accurately portraying a company's financial performance. For example, Priya sets up a lemonade stand and sells lemonade for rupees 10 per glass. On the first day, Priya sells 20 glasses of lemonade and receives rupees 200 in total. When will Priya recognize her revenue? Priya recognizes revenue at the time of sale when the lemonade is sold to customers. The revenue from each glass of lemonade sold is recognized immediately, that is 10 rupees. And at the end of the day, the total revenue earned is recognized for that day's sales, that is 200 rupees. That's all for today's video. If you found it useful, give it a like, share it with others, and please subscribe to my channel. Press the bell icon for future notifications. Until next time, keep learning and growing. See you in next video.